Well, good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Sunday evening, the 4th of May, 2025. I wanted to wait until we saw how the market would react to the OPEC news that they're willing to increase production dramatically right in through the end of October from this point forward. So they're going to keep one more month with 411,000 barrels a day, which was a big surprise to the market in April. They're going to keep that going now, but they're ready to start ramping up after that. Right. Bonds and notes, pretty stable, getting a small bid. The stock market's had such a big rally that you don't need a reason for it to back off. The gold market's got smashed pretty hard from 3,500 down to 32. It's a little bounce, but I don't know that it's more than that. The dollar's still not picking itself up, still in a major bear trend. I am very worried that if it gets much under the 97.30 level, that you open the door up for another 7 to 9% break, especially if you close like that. So I'd be watching that. I'm watching what Bitcoin is doing. It's down $2,500 tonight. That gets to be interesting here. So I'll be looking at that when I put up my recommendations for my clients in about 30 minutes from now. In the gold market, this is a monthly chart of closes. You can see that you're staying over everything, so you have a bullish bias. Is there anything tomorrow in the way of reports that could impact the market? Well, you're going to get the S&P Final Service PMI at 845, the ISM services at 9. I don't think that's going to do it. General earnings report. So I'm not seeing anything quite there. So we'll see what this all does. In the gold, there was also no news that I can see on Ukraine and Russia having agreed at this hour tonight on anything. And Israel's calling up thousands of reservists. They want to go in and they are going to hit again in Gaza. They want Hamas to give up its arms and get out of government. That's what they're asking for. And until Trump stops them, that's what they're going to get. So this is where you're at, and there's nobody willing to take this on. But the Houthis, they did fire a hypersonic missile, they said, that got through Israel Defense Forces and hit right near the Ben Gurion Airport and shut down air traffic. And all of a sudden, if you're flying on a United States carrier, they're not going now. It's gotten too much damage. You'd have to fly a foreign carrier to go there. So as you look at these markets, you can see that you're holding up right there. When we look at a weekly bar chart, you can see how the market's come up and it's doing fine. The pattern still looks to me bullish. You still have a pattern of higher lows on the swing line, higher highs. You also have in the market, as you look at it, the 18-week average, the support for it right through here at 29.95, and that includes tonight's quote, so this is up to date now. I thought it would get near the 3,000 level, and it has, and it's now over the last break low, so it's a very live move. Why? Because as we get closer, you're going to see you've stalled out at the upper Bollinger Band, and now what's going on is you've lost the bullish momentum. When you lose a embedded slow stochastic, especially on a daily chart, bullish or bearish, you often go to the closest main moving average. We'll see if that happens on a weekly. My study shows it's not as high probability as the daily, which is super high probability. That doesn't mean it works every time, but it's very, very high probability. I wouldn't want to see new highs made. That is where this theory would go wrong, but I'd look for price in the 18-week average to make a run at each other. That could take time. It's a weekly chart. When you look at the gold-silver ratio, it's holding together, so gold is staying stronger than silver. When we look at the silver, it's void of a trend on a weekly chart. You have a higher high, a lower low. You've gone from the upper Bollinger Band to the lower, and you keep coming back and fighting a battle at the center line, which is the 18-day average, and that is from where things develop. I see nothing in silver. In the copper market, if this market closes under the 18-week average at 458.75, there could be real problems in this market. So it's something you want to keep your eye on. On the platinum market, you're back under the 18-week average. The trend is down. It went down and stayed down a week ago. It's following through. If the market can take out last week's low, let's see if I can get that and tell you. If it takes out 960.70, which it has not yet done, then prior to it taking that out, I'll look for it to make at least a run to 950.230, if not even lower than that. Depends how the momentum and all stays with it. And last but not least, we had a bounce in the dollar. The bounce didn't change the embedded reading on the weekly chart. This chart has kept its bearish reading, and you're getting dangerously close to a major bearish crossover where the 18-week average of close is ready to get under the 100. If they all started coming down, you could talk a dollar under 90. I know that sounds crazy to people. It is a possibility. It's a rare fifth price count if the market wants to get these moves and get under this 97.28 level and stay there for a bit. That opens the door up. So again, I want to repeat, what we have for you is a special report on the dollar index. All you do is go to iraepstein.com, click it right there. I cover for you the SPY and the futures markets on the S&P. I look at weekly, daily charts. I look at seasonals from a 5, 15, 25-year period. I cover the price counts with it as well. So if you're interested, an interesting report, and I cover my ground as to what I think will go on between now into the summer. Wait till you see the orientation that I give you towards everything. So I recommend, if you'd like, take a look at it. It's an interesting update on that report. I'm Ira. I'll catch up with you all come Monday morning. Take care now.